light bulb goes off. It's not that the price of the gold and silver are going higher. It's that the currency being used to pay for that gold and silver is being devalued. I mean, look at this. This just sits there, right? It just so happens because of the ongoing currency devaluation that it takes more of that currency to buy this. And that's, I mean, it's really as simple as that. You know, once the entities that are trying to, keep a lid on the market by shorting everything they can, once they have to throw in the towel, I mean, the upside is just absolutely explosive. I mean, I like to say, we're going to hurt our necks when we snap them up to look at how quickly and how high it goes. You're not going to throw everything all in at once and chase the momentum, right? So it's to me, it's just kind of like, put on like maybe 2/3 of the capital that you want to allocate and just forget about it, set it aside. And then if you want to trade it, and I'm not saying I recommend trading it because it's volatile, use 1/3 of your capital for that. But just know, I have friends and colleagues that sit there and their heart races with every short-term ebb and flow in the sector. And it's like, you can't look at this sector that way. It's a long-term fundamental trade. It has been for a while. It still is. The ratio went from the high 90s in 1940 to 15 at the end of 1979. It's back at 81 now, right? And the median from 1915 to now is around 40. So if you just go back to the median price since 1915 over that time period, that implies a price of 103 for silver. So in my mind, it's like, am I going to buy gold or am I going to buy silver? Well, I have some gold, but to me, silver looks like a much better value proposition.
What if you were told that we are standing on the edge of a financial explosion? According to mining expert Dave Cranler, we are at a point where you could put 20 gold stocks on a dartboard, throw darts, and still make money. So, what's really happening? Dave Cranler clarifies a critical misconception. It's not that the price of gold and silver is skyrocketing. The truth is, the value of your dollars, pounds, and euros is plummeting. As Dave explains, the metal just sits there. It's the currency you're using to buy it that is being systematically devalued. But the game has changed. The power to control the price has shifted away from the traditional Western banks. And this has set the stage for what could be the trade of a lifetime in silver. Dave points to a staggering $4.5 billion short interest in the primary silver ETF. He states plainly, this tells you everything you need to know. The system is broken. The entities that have long suppressed the price are now caught in a trap of their own making, facing a historic short squeeze. With global demand for silver in AI, technology, and military applications soaring, the physical metal is simply not there to cover these massive bets. Dave Cranler's analysis, based on the historical gold-to-silver ratio, points to a conservative price target of $103 for silver, and the pressure could drive it as high as $80 to $140 before the situation is even resolved. What should you do? Dave lays out a clear strategy. First, physical silver is your key. It's recognized, divisible, and the ultimate barter asset. Second, for explosive growth, consider the mining stocks. As Dave Cranler explains, for every dollar the metal price rises above a miner's cost, that entire dollar falls straight to the bottom line, creating incredible leverage. In the words of Dave Cranler, this is the most no-brainer sector for long-term wealth protection. The fundamentals are undeniable. Subscribe to Fine Metals for best financial advices and latest news.
Yeah, I mean, how can you have a $4.5 billion short interest in an ETF? I mean, it says it all.
For every dollar you get above that, it falls straight to the bottom line. So it gets to a point, and I don't know I'm sure someone out there's probably calculated an industry-wide AISC is, people like to say it's all in sustaining cost. But, once the prices of gold and silver get above that, every dollar falls right to the bottom line. And so, I mean, the leverage in the mining stocks is just explosive. A project actually gets converted to a mine are very low. And, you'll go through periods where, it's basically juniorminingstock.com and they all go higher. But, you want to find the ones that help you survive when you go through the ebbs and flows of the ups and down cycles of gold and silver, right? Kind of learn how to understand the mining stocks and how to read the financials and the footnotes. I started the footnotes when I go and analyze financials. I don't want to see the income statement, cash flow, and balance sheet until I've seen the footnotes to see where they may be trying to fudge the numbers. And so you kind of start from the bottom up, and from there you can sort of pick out the portfolio of stocks that you think have the best true leverage to the prices of gold and silver. I try to call it as I see it and recommend the stocks that I think are going to outperform. At a point, you probably just be able to go out and scoop up any mining stock, and look for the ones that are relatively cheap. But as the market ebbs and flows, there's definitely, a portfolio of companies that'll be more durable. And I that's what I try to put together, and that's what I look for. They go through periods of excess speculation and excess sell-off. But I mean, it's the prices of gold and silver and what's going on with gold and silver in the bull market there that's really driving it. And then it gets to a point where, you can put 20 gold stocks on a dartboard and throw darts and you're going to make money. I mean, I guess the skill is trying to figure out which ones are more likely to outperform, the other ones on the dartboard. Well, yeah, that's true for the most part. I mean, when you get into a period where, gold and silver are explosive, again, I think you can throw a dart, but, over a longer term, I think, understanding how to fundamentally look at each mining stock or each company and the factors that are driving them. And it's particularly with the juniors, because the odds that, over short-term periods, yeah. But I mean, I think when you look at what's going on fundamentally with the financial and economic system and, the insane amount of government borrowing, at some point, I mean, I'm in this sector for the long haul. I've been in it for a long time because I just know that, until we have some sort of financial collapse, which I do think we're headed to eventually, we're going to be in a bull market in the precious metal sector. You're going to have ebbs and flows, but, and that's why, accelerating rate, and they're moving away from the dollar as a reserve currency. And as that happens, again, this stays in the same place, but as the dollar devalues, it takes more of those dollars to buy that. And that's why it looks like the price is going higher when in fact, the dollar's rug is being pulled out from under everyone who doesn't have, isn't protecting themselves with physical gold and silver.
Month or two to see, oh, look, it's doing really well, because it doesn't matter. It's, once you've made a decision and it's based on good information, unless there's something major that happens, which is why people ought to know, or to be, or to monitor what you're saying, because suddenly there may be a geopolitical situation that isn't beneficial. It may be an idea to lighten up or get more or whatever it might be.